Here's something nobody's telling you. Right now in Richmond, Virginia's General Assembly is in session. They started January 8th, and they have until March 14th to pass a budget. And since they opened the doors, more than 4 dozen tax-related bills have been filed. Some would raise your income taxes, some would create brand new taxes that don't currently exist in Virginia, and some would cut taxes. And most of them are going to die in committee. In fact, many already have. But here's why you should care even if none of these bills pass. The proposals tell you where the political pressure is headed. They tell you what's being seriously debated behind closed doors. And some of them are not dead. They've just been folded directly into the budget, which is being negotiated right now and has to be signed by March 14th. Guys, I'm Rick Hartunian. I'm a real estate agent and investor here in Northern Virginia and the greater DC area. I am not a tax professional, and this is not tax advice, but I work with families every single week whose home buying decisions are directly shaped by Virginia's tax structure. And if you've been following this channel, you know I did a deep dive on Virginia's current tax code and what Northern Virginia homeowners are actually paying. If you haven't seen that video, I'll link it right here below and you can watch it after this. But this video is the update. I'm walking you through every major proposal from this session. What's alive, what is dead, what is hiding in the budget, and exactly what each one could cost or save a typical Northern Virginia household. No politics here, guys, no spin, just the math. Now, before I get into the proposals, I want to start with some good news because there was a real risk hanging over every household in the state. If you watched my last video, you know that Virginia's standard deduction was scheduled to sunset after the 2026 tax year. If nothing was done, the standard deduction for a married couple filing jointly would have dropped from $7,500 all the way down to $6,000, starting with income earned in 2027. That would have meant roughly $661 more in state income tax for every joint filing household in Virginia. Now here's the good news. Both the House and Senate budget proposals are increasing the standard deduction and preventing that cliff from happening. The Senate version proposes $9,200 for single filers and $18,400 for joint. The House is also increasing the amounts. The reversion to $3,000 and $6,000 is effectively off the table. Now that's a win for every household in the state regardless of your income. Now let me tell you about what did not go so well. Now, several of the most headline-grabbing proposals from this session have already been killed or they've been shelved, the ones that everyone's been talking about. And I know the natural reaction is to say, well, if they're dead, why should I care? Because how they died tells you everything about where the political line is right now. And more importantly, some of these were not killed, they were just continued. And in Virginia legislative language, continued definitely doesn't mean dead. It means that we'll be back. Now, HB 378, the net investment income tax, this was the big one. HB 378 would have created a brand new 3.8% tax on net investment income. That's capital gains, dividends, interest, rental income, passive business income for anyone with modified adjusted gross income above $500,000. That rate mirrors the federal net investment income tax from the Affordable Care Act, but this would have been a separate state-level tax stacked right on top of it. If this had passed, Virginia's effective top marginal rate on investment income would have jumped from 5.75% to 9.55%. Combined with federal taxes, a Northern Virginia homeowner selling a property with significant capital gains could have faced a combined rate approaching 33% on that gain. And here's the important part. It was killed unanimously. 10-0. Democrats killed their own party's bill. That's a strong political signal, but the concept is not gone. It can come back again in 2027 as a new bill, of course. And if you're holding investment property in Northern Virginia with significant unrealized gains, then you need to understand that this idea now has a formal template down in Richmond. Now, HB 979 and 188 are the millionaire bracket mega bills that you've heard about. We need to pay very close attention to this one. This was the highest profile income tax proposal of the entire session. 2 brand new brackets, 8% on income between $600,000 and $1 million, and then 10% on everything above $1 million. In exchange, a larger standard deduction for everyone and grocery tax elimination. Sounds like a fair trade for the most part, but let's run the actual math. Let's say you're a household making $150,000. $300,000, even $600,000, you would get a small tax cut, about $144 a year. But at $800,000, you're paying $4,300 more. At $1.2 million, $13,000 more. And at $2 million, an extra $47,000 a year in state income tax. Now here's what the Tax Foundation flagged that nobody in the headlines mentioned. These new brackets were not indexed for inflation. That means that over time, more and more taxpayers get pushed into higher brackets through bracket creep. The same thing that happened with the federal income tax. And without changes to Virginia's spouse tax adjustment, which is a credit capped at just $259, this bill would have created a significant marriage penalty for dual income households. And here's the kicker. If both HB 979 and HB 378 had passed together, Virginia would have had the highest top marginal rate on investment income in the entire country. That combination is off the table for now, but HB 979 was continued, it wasn't killed. That's a very different signal. This template is coming back in 2027 most likely. Now, HB 978 flew under the radar, and it probably shouldn't have. This bill would have dramatically expanded Virginia's sales tax to cover services that are currently exempt. Your gym membership, dry cleaning, a plumber coming to fix your sink, landscaping, pet grooming, concert tickets, even counseling services, all taxed at 5.3%. For a Northern Virginia homeowner, the math adds up pretty fast. Let's say if you're spending $12,000 a year on landscaping, maybe $5,000 on home repairs, and a couple thousand on gym memberships and streaming, you're looking at roughly $1,000 a year in new taxes on things that you're already paying for today. Now guys, this is a national trend. Taxing services is coming. It was continued, it wasn't killed, and when this returns, it hits everyone, not just high earners. Now HB 900 was the digital services tax and the Nova delivery fee. This one was framed as modernization. Man, I can never say that word. This one was framed as modernization. Lower the base sales tax rate by 0.3 points, but expand the tax to digital goods. Netflix, Spotify, cloud storage, software subscriptions, and here's the fun part, a brand new 20-cent fee on every single retail delivery in the Northern Virginia Transportation District. That means every Amazon package, every Uber Eats order, and every FedEx shipment. The digital services tax alone was projected to generate $1.48 billion in its first full year. That's an enormous revenue number, and that's exactly why this concept is probably going to come back next year. Now, a few quick hits on some other bills that were killed. HB 12 was a Republican proposal to permanently lock in the current higher standard deduction. It was tabled 7-2 in the subcommittee, and the standalone bill failed, but as I mentioned, the policy is being addressed in both budget proposals. Several bills to eliminate the car tax were filed also. One through a constitutional amendment, which was continued to next session, meaning that the earliest it could pass would be 2028, and it would still need a public referendum. Another would have zeroed out the rate beginning in 2027. Both of those failed, but the House voted 68-25 to pass a resolution directing the Department of Taxation to study elimination options. Not happening this year, but it's now an active state study. On the grocery tax, Virginia previously eliminated its 1.5% state share. The remaining 1% local levy is still in place. Now guys, real quick, I work with families every week whose decisions are shaped by exactly this kind of analysis. If you want to talk through how any of this affects your specific situation, all my contact info is in the description below. No pressure, just reach out anytime. Let's keep going. Now let's talk about the bills that are alive and where the real money is. Now the budget. This is the real fight. On February 22nd, the House and Senate Money Committees released competing budget proposals for fiscal years 2027 and 2028. Forget the individual bills for a second. This is where the rubber actually meets the road. Good news first, neither budget includes new general taxes on you, but they diverge on one enormous item, and it's going to define the final deal. It's the data center sales tax exemption. The story is honestly almost hard to believe. When Virginia created the data center sales tax exemption back in 2008, lawmakers were told that it would cost the state up to $1.54 million per year. In fiscal year 2025, the actual foregone revenue was $1.6 billion. That's not a typo. The exemption waives the 5.3% sales tax on all the expensive server equipment, cooling systems, and software that data centers are constantly replacing. The Senate budget proposes letting this exemption expire on January 1st, 2027. The House budget keeps it in place, but it adds clean energy requirements for data centers to qualify for. This is the single largest revenue question in the entire budget. And here's why it matters to you as a homeowner. The Senate wants to use that recovered $1.1 billion in revenue for things that directly hit your household. The House budget does not include the rebate and keeps the data center exemption. Instead, the House is counting on roughly $265 million from legalized internet gaming. Both budgets reject Youngkin's proposed conformity with federal tax cuts from the One Big Beautiful Bill. Neither includes no tax on tips or no tax on overtime. The data center industry came out immediately against the Senate plan. The Data Center Coalition says that Virginia could lose $1.3 billion in net tax revenue over 5 years from decreased investment if the exemption expires. This is the fight that is going to define the final budget. The Senate budget assumes revenue from a new 11% tax on firearms and ammunition sales. If you're a firearm owner in Virginia, this would add roughly $55 to the cost of a $500 firearm and $5.50 per box of $50 ammunition. Now, this next one's not technically a tax bill, but it is going to function like one in your household budget. This proposal creates a statewide paid family and medical leave program that's funded through employer and employee payroll premiums beginning in 2028. Its projected cost is roughly $2 billion per year. For employees, this shows up as a payroll deduction, similar to Social Security or Medicare. The exact premium split has not been finalized yet, though, but expect a new line item on your paycheck. Now, Governor Spanberger announced that Virginia will rejoin the RGGI, which is the Regional Greenhouse Gas Initiative. It's a multi-state carbon emissions trading program. This is not a line item on your income tax return, but it absolutely affects your utility bill. RGGI requires power producers to purchase emissions allowances, and that cost gets passed straight to you, the ratepayer. During Virginia's 3 years in RGGI, the state collected over $800 million that went to flood preparedness and low-income energy efficiency. But critics point out that RGGI states experienced a 64% greater increase in electricity rates compared to non-RGGI states over an 8-year period. Supporters say that Virginia's rising utility costs are driven more by the Virginia Clean Economy Act than RGGI itself. Either way, here's a number that matters. Monthly residential electric bills in Virginia have risen roughly 30% since just 2021, from around $120 to $125 a month to $160 to $170 per month. RGGI adds another variable on top of that. Now, both chambers passed legislation to legalize internet gaming and retail cannabis. These are not direct taxes on you, but they are relevant because every dollar from these sources is a dollar that the state does not need from your paycheck. The House projects roughly $265 million from iGaming, and the Senate projects roughly $169 million from cannabis and the firearms tax combined. Now, HB 334 is interesting. It could directly affect you depending on where you live. It gives individual counties and cities the ability to put a local sales tax on the ballot up to 1%, with the revenue going exclusively to school construction and renovation. If your county puts it on the ballot and voters approve, your local sales tax rate goes up by 1%. On $50,000 in annual taxable spending, that's about $500 a year. But the money goes to schools, and school quality here is one of the biggest single drivers of home values in Northern Virginia. For families with kids, this is a trade-off that probably many would welcome. All right, enough about bills. Let's talk about you. I want to run 3 quick scenarios on typical Northern Virginia households to bring this all the way home. Scenario 1 will be a dual income family, $200,000 joint income per year. None of the proposed income tax increases would have touched this family, well below the $600,000 threshold. The standard deduction increase saves roughly $50 to $100 a year, and if the Senate version passes, they get a $200 tax rebate. Grocery tax elimination saves about $96, and the net change from what's likely to pass is roughly flat to $300 to $400 in total savings. No new cost from anything currently advancing. This family can breathe easy for right now. Scenario 2 would be a high-earning family at $800,000 joint income. Now, this is the family that was directly in the crosshairs. HB 979 would have added roughly $4,300 per year. HB 378 would have piled on another $11,400 or more depending on this family's investment income. Combined, nearly $16,000 a year in additional state taxes. Both of those are either dead or continued. But this family needs to understand that the political appetite for taxing income above $600,000 is pretty real and it's growing. And these proposals could return next year for discussion. Scenario 3 is the real estate investor selling a $3 million property with $1 million in gains. For real estate investors, HB 378 was the most consequential proposal this session. A $38,000 hit on a single sale. It is dead for now, but if you're holding property with significant unrealized gains, the fact that this concept was formally introduced and that similar taxes already exist at the federal level and in other states is absolutely worth factoring into your hold versus sell timing. Now, if you're moving here from another state or another country, let's talk about Virginia versus the competition. This is a scenario that I hear the most from relocating clients. Families moving to the DC area from out of state are choosing between Virginia, Maryland, and sometimes DC. Right now, Virginia is pretty competitive. The 5.75% top rate is lower than Maryland's effective rate when you add county income taxes as well, and it's well below DC's 10.75%. But if Virginia moves to a 10% bracket while neighboring states keep trying to cut, that math changes dramatically. If you're a high earner choosing where to establish residency, the trajectory matters more than just today's snapshot. Many of the folks that I work with that are moving here at a certain income level, taxes are a big reason why they choose Virginia over Maryland or DC. So keeping your eye on this can effectively change your decision moving forward if you do want to be in the greater DC area. All right, I threw a lot of numbers out at you guys, so let me bring it all home. First, let's separate the signal from the noise. Roughly 1,000 bills die every single session. A bill being introduced does not mean that it's becoming law, no matter how many people you listen to on Instagram or here on YouTube. People love to get angry immediately upon hearing news of a proposal, and usually for good reason. HB 378 was introduced and killed in 3 weeks. The proposals that matter right now are in the budget, and neither budget raises general taxes on you. The data center exemption is the major fight. Second, the standard deduction is safe. Both chambers are increasing it. The cliff from $17,500 to $6,000 for joint filers is not going to happen. That's the biggest near-term relief for middle-income families, and it has bipartisan support. Third, the pressure on high earners is real, and it is growing. HB 979's template of higher brackets above $600,000 paired with a larger standard deduction for everyone else is politically appealing because it benefits the majority of voters at a cost to a small percentage. It was continued, not killed, so let's expect this framework to come back next year. Fourth, watch the services tax. Virginia currently does not tax most of its services. The movement to tax digital goods, streaming, home repairs, and professional services is a national trend. It's not a question of if, it's more when. And when it arrives, it hits every household, not just high earners. Fifth, utility costs are the silent variable that nobody's really accounting for. RGGI reentry, data center energy demands, and the Virginia Clean Economy Act are all pushing utility bills higher every year. Your electric bill has gone up 30% in just 4 years. None of these proposals reverse that trend. Factor energy costs into your total cost of living, not just for taxes. And sixth, the car tax is not going anywhere this year, but the study resolution passed 68 to 25, like I said, with broad bipartisan support. So if you're making a home purchase partly based on vehicle cost, which you're probably not, but it's part of the thought process, and at $4,000 plus per year for a 2-car household, that is a real number. Don't assume that it's permanent, but also don't bank on it disappearing anytime soon either. Here's the bottom line. If you're buying a home in Northern Virginia in 2026, the current tax structure is intact. No new taxes have been enacted. The standard deduction is being protected and increased. The most aggressive proposals have been stopped. But if you are thinking about 7, 10 plus years, which is how a lot of the families that I work with think about home ownership, the direction of Virginia's tax policy is definitely something that you need to factor into your decision, especially if your household income is above $600,000 or you have significant investment income. Guys, I'm going to do a follow-up video when the final budget is signed in the middle of March. If anything changes materially before then, I'll try and put it in the community tab here on YouTube, maybe, and update the description of this video to try and just keep up with the trends. It's not the normal video that I do, but this is a very important topic that I'm having so many conversations about with people that reach out to me. So if you are considering Northern Virginia or you're already here and you're thinking about how any of this affects your next move, feel free to reach out at any time. All my info is in the description below. I'm not a tax advisor again, but I can connect you with one and I can show you exactly how the tax structure in each county and city affects the total cost of owning a home here. I also have full data-heavy comparison videos on McLean versus Great Falls, Arlington versus Falls Church, and many more. They're all linked in the description. I'll also pop them right here on the screen for you. Make sure to hit subscribe also so you see the budget update whenever it drops. And if this breakdown was useful, share it with someone who's thinking about buying or selling in Virginia right now as well. They're definitely going to want to hear this information on the taxes. Thanks so much for watching, guys, and I'll see you next week.